Hey, it's Jack from Alpha Charts with a monthly stock review video. Today is January 31st, 2023. We have about 14 minutes until that monthly candle closes. But I'm going to go ahead and start the review a little bit early because I got some stuff to do this week, and I don't think that things will materially change between now and the next 14 minutes. So let's get into these reviews. All right, so SPX. By the way that I'm going to do this is we do the actually start with DIA. We're going to do the indexes first, right? Then we do the sectors, and then we're going to do the top 20 stocks by market cap. Okay, so that's what we're going to do. And so here's the Dow Jones Industrial, and you see he had the big dip, and then back here in October, maybe a sign of the bottom. We'll see. And I think this 50-day is, I'm sorry, 50-month. I don't want to say 50-day. 50-month is the line I really want to focus on, which is the blue line. Here's a 50-month. Again, price came right back above it, and now we're challenging this general area, trying to complete this bottoming pattern. So Dow Jones Industrial, again, on the month, up 2.52% for the month of January. Something else to consider, too, is the month of January being a positive month bodes well for the rest of the year. So that's a big deal, right? So up 2.52, that looks nice. SPX, up 5.8%. Again, there's a ton of markings on here. You know what? Let's just clean them all off. And you see, again, October may have been the bottom, and the 50-month is, again, still going higher. And it looks like things may want to start to move higher as well. So we like that. Let's look at the Qs. Here are the Qs, and there's your 50-month. Again, not quite as strong as the other indexes, right? It did hold the 50, but it's kind of moving sideways at this point. Nice 10% move on the month of January. If that's anything for things to come, maybe there's a makeup trade here that will continue to work. It was minus almost 9.25% in December, and basically made it all back in the month of January. So that's really nice to see. Mid caps, MDY, by far the strongest, kind of breaking out of this bottoming look. There's your 50-month, held right where it was supposed to. Very strong. We are seeing a decrease in volume as this goes higher, but that doesn't bother me too much because only price pays. And we'll see what happens when it gets back into this $500 area, right? Because there's a lot of potential people trapped up here, and from 2021, and we'll see what happens if and when it gets up that way. All right, and then the IWM monthly charts, again, trying to move higher, looks pretty strong as well. Closing near the highs, up 10%. But let's see what the mid caps were up. They were up 8.79. Small caps up, 9.5%. Strong, January. And again, if that bodes well for the rest of the year, small mid caps look great and Qs look great. Again, well, it remains to be seen. So let's break it down into sectors. What did really well in the first month? We have energy, 2.77% up, and more importantly, near all-time highs, right? Just right near these all-time highs. I think 100 is a big deal for this, for the energy sector. So energy, again, you do see a decreasing in volume, right? It is what it is, but it price pays. That's it. XLF, trying to move higher, right? We had a very strong 6.67% in January. That was positive. That looks really, really good. Industrials, 3.52 on higher volume, near all-time highs. Like, that's really nice look. And look how well this is above all the moving averages. There's your 50, and then the short term on that one. That's 50-month, of course. XLK, not quite as strong, but doing good, up 8.84%. on the month. So a very strong look to it there. Again, maybe there's a catch-up trade to be had in technology. XLV was down. So our first sector that was down is healthcare, down 2%. All right. Again, that may bode well, bode unwell for healthcare names going forward. Use that information however you want to. XLY, very strong. Wow. Consumer discretionaries up 14.75. Again, still a weak looking chart, and we've seen some of these big moves in the past only to be sold, but that's a very, very strong move, and we should take notice. Again, also take notice decreasing volume. All right. XLC, another 14.46. Again, it's a beaten down name. There's your 50-month over here, well below it. This is more of a mean reversion trade or maybe short covering trade. Again, decreasing volume on the XLC. XLU, that was down. So, I don't really trade utilities, but that's our second down sector, probably interest rate thing. What else do we have? XLP. Staples are down, right? So the safety trades down. That's interesting, right? XLB. Materials up 8.81%. Very strong, good volume coming in, or decent volume. And again, above all of its moving averages, near all-time highs. Materials, those are your metals, miners, copper, gold, whatever. All looks great. And again, it shows in the materials, strong month. And then real estate, XLRE, up 9.83% on decreasing volume. But again, kind of a mean reversion trade. We'll see if that continues if we get some follow through in February, right? Oh, and I added BND. This was from a member or somebody that watches this recommended adding BND, and I like that idea. It's the Vanguard Total Bond Market ETF, just to get a bit of bonds in there. And you see the month bonds were up 3%, and so again, they just got hammered, right, with the rising rates. But maybe, 1, 2, 1, 2, 3, 4. Maybe there's another leg down, maybe not. But overall, this looks pretty. This looks, it bodes well for bonds. Let's put it that way, and maybe interest rates easing a little bit. Not taking rate cuts, but maybe a little bit of easing of interest rate pressure. We'll see. Or maybe people need a safe haven, right? Again, I don't want to go too far into this. All right, so those were the different sectors, and you can see that there were some that really, really did well. I mean, discretionaries, again, more maybe a mean reversion trade, but it was very, very. It stood out at 14.85. Communications at 14.52, right, and XLB. That was 8.86. That was very, very good. Was industrials, that was a big one too? Well, it wasn't that big, 3.6. Anyway, you saw all the videos. So not too bad looking on the index level, right? Again, it remains to be seen if we get follow through, but January does well. Good chance. Now, nothing goes straight up, but good chance the rest of the year may bode well as well. All right, let's look at the top market caps. Apple is still in the first place. Had a 10.79% earnings this week, actually. So we'll see how that affects it. But we just still have that slow drift down in Apple, lower volume here. Not the most exciting chart, I can say. Microsoft looks worse than Apple. Had a 3% gain for the month, but again, bearish crossing on the shorter term monthly moving averages. 50-month is really, has to hold. And so far it has. Google, we just said communications were really good. Google is a big part of that, up 12%. So we'd kind of expect that. But again, still a bearish cross, which makes me think this is more of a short covering move than it is a new uptrend starting. Earnings again this week, I believe. Amazon, nasty bearish cross back here, right? In May, almost a year ago, well below the 50-month. Again, had a 22% move higher, but this to me, I mean, there's 1, 2, 3, 4, 5 down months in a row, and top to bottom, 44% loss since August, right? 2022. That is a very, very rough look to it, right? So he had this big bar here, he had a large bar here, but bearish look to it. BRK.B. Berkshire Hathaway is next, and the exact opposite, right? Earnings coming up, but on the monthly, looks super strong, right? They're in the right businesses, railroads and banks and stuff like that. Looks great in energy. Speaking of energy, XOM going out at all-time monthly highs, right? Like, what more do you want? I don't care that the volume was lower. This is just super strong, almost getting to the point of extended. We did have two kind of consolidation months, right? But it going higher is gotta bode well for the energy sector in general, right? If ExxonMobil is going higher. Tesla. Again, there's your bearish cross. Looks really bad. Stick save on the 50-month. Giant volume, 40% move higher. But again, after 2, 4, 5 months lower. And this was a 36% lower. Again, looks rough. Earnings up for a while. And we'll see if it can recoup some of this or not. But not the place I'd want to be in. United Healthcare, we said healthcare looked pretty rough, and this is starting to break down. So above the 50-month, but pretty high volume right there on the monthly, and trying to, it looks like to me, it hasn't touched the 20-month since 2020, and so it's it looks like it almost tagged it right here. Not a good look. United Healthcare. Visa. Consumer may be strong again, right? We saw discretionaries, and now we see Visa up 11%, right? And 3 out of the last 4 months, Visa was up, right? 16%, 4%, down 4%. So that's a sideways move. And now up 11%, right? Boom, boom, boom. That is really nice. Closing near the highs on the monthly. See, we have 2 more minutes to the market's close. But overall, strong looking chart. So discretionaries, again, making sense, as a consumer going to start spending again. We have Nvidia next. So let's look at a good looking chart, right? I mean, we have earnings coming up, but 50-month held. 3 out of the 4 months were back up. The October looks like the low, and trying to break above all these wicks, right? So close above all these wicks would be really, 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 I think, positive, and give some more credence to semiconductors as being a bullish sector, with Nvidia potentially leading. Taiwan Semiconductors. We had the low, we'll call it here. I don't know what you want to call it low, but either way, good volume coming in, move higher above all the moving averages, back above the 50, back above the shorter term monthly moving averages. And so super, again, 34%, gave 10% back, up 24%. Last 3 months, I mean, very, very strong. Johnson & Johnson, we don't expect much from them. And yeah, sliced right through all those moving averages. Last month, it was looking pretty good in general. But look at 1 month could change the entire impression of the chart, right? So this does not look good at all. Could not make a new monthly high, made a lower high, and turned over. Not good. JP Morgan, financials look pretty good. JP Morgan looks pretty good, right? 50-month, looking pretty bad back here. We had this big 20% month, follow through month up, sideways move, right? Only gave back 3%. And now we are breaking higher here. And as long as we break higher, that's all I care about. 4%, I don't care the number. It closed higher. And now, markets are closed now. That's JP Morgan. Walmart. Again, this is a combination, discretionary and staples, right? But above all of his moving averages and not doing anything wrong, right? Kind of more of a sideways swag than anything else. Meta, right? So communications were up. Meta's a big piece of that, and Meta was up 23% for the month. 3 months in a row, they've been up quite a bit. Still well below these moving averages. They have a lot of work to do, but that's very impressive. Going from $88 to $153, right? So I bought down here. They made 75% on their money. Pretty impressive, even for this is just a counter trend rally, which it could be. MasterCard should look like Visa. It does. Consumer must be strong. Again, hasn't broken out yet, but very strong looking chart overall. CVX, I expect to look like XOM. It was actually down last month. That's interesting. Down 3%, where XOM was up 5%. So that tells us a lot of information, right? Pick and choose what you want. ExxonMobil, way better than Chevron, right? Because it is, facts, charts, their price. That's it. Again, not a bad looking chart, but if I have to choose one to be in, I'd rather be in ExxonMobil than Chevron, right? Procter & Gamble, again, with staples not looking that great, Procter & Gamble making a lower high, and then, going through those moving averages as expected, not a good looking chart. Eli Lilly, holding up okay. I did pierce through, then the buyers showed up. So this 300 area, it looks to be very, very important. Earnings coming up. Their drug, Mounjaro, is doing extremely, extremely well, as well as probably many of their other drugs. So, again, a good-looking chart, Eli Lilly. So for healthcare not looking good, Eli Lilly is holding up better than most. And the last one is going to be Home Depot. Again, seems like the consumer is back. 50-month held. It's going sideways, but above these short-term moving averages, and it's got the bullish cross, so that all looks good. And again, it's a nice looking chart. Nothing that I'm screaming buy on, but it's a good looking chart, and it goes into more of the consumer discretionary and industrials, home builders, and that kind of stuff, right? Home Depot kind of plays a role all in that, so supports the thesis, right? So again, XLB looking good, XLI looking good, XLF looking good, right? All those looking good. XLY, potentially, if we get a follow-through month up here, that's what I'm looking for, right? So right here, not what I'm looking for exactly. It's a start. We get another month up. That would say discretionaries and would actually support that soft landing by the Fed. Again, this week we have Fed speaker tomorrow, not Fed speaker, FOMC tomorrow, right? So rate decision tomorrow, that's Wednesday. And then we also have gigantic earnings with Apple and Google and Meta and all that this week. So know your earnings dates, monthly charts, like leg days, don't skip them. Find me on Twitter at AlphaCharts365. Like and subscribe to all my videos and subscribe to my channel, and you'll have good fortune going forward. Hope you all are doing well. Take care.